Introduction to Economy Analysis. Economic analysis involves the systematic examination of various economic factors and indicators to understand the overall health, performance, and trends within an economy. This analysis is crucial for businesses, policymakers, investors, and individuals to make informed decisions. Conducting economic analysis requires a comprehensive approach, considering both macroeconomic and microeconomic factors. Here's a complete guide on how to conduct economic analysis. A. Understand the basics. A. Define the scope. Clearly define the scope and objectives of your economic analysis. Determine whether it's focused on a specific sector, industry, region, or the overall national economy. B. Collect data. Gather relevant economic data, including historical and current information. This may involve macroeconomic indicators, industry-specific data, and key financial metrics. Do. Macroeconomic analysis. A. Gross domestic product, GDP. Examine GDP trends to understand the overall economic output and growth. Analyze GDP components, including consumption, investment, government spending, and net exports. B. Inflation rate. Evaluate the inflation rate to assess the general price level in the economy. Consider both consumer price inflation and producer price inflation. C. Unemployment rate. Analyze the unemployment rate to gauge the health of the labor market. Consider trends in employment levels and participation rates. D. Interest rates. Assess central bank interest rates and yield curves. Understand the impact of interest rates on borrowing costs, spending, and investment. A. Exchange rates. Analyze currency exchange rates, especially if your analysis involves international trade or investment. Monitor trends and fluctuations. Teen. Microeconomic analysis. A. Industry analysis. Evaluate specific industries to understand their performance. Consider factors such as market structure, competition, and barriers to entry. B. Company financials. If applicable, analyze financial statements of specific companies within the industry. Assess profitability, liquidity, and leverage ratios. C. Regulatory environment. Understand the regulatory framework affecting businesses. Analyze how regulations impact operations, costs, and market entry. 4. Qualitative analysis. A. Conduct a SWOT analysis, strengths, weaknesses, opportunities, threats, to assess the internal and external factors influencing the economy or a specific sector. B. Political and social factors. Consider political stability, government policies, and social trends. Analyze how political and social factors may impact economic conditions. 5. Forecasting. A. Economic indicators. Use leading economic indicators to forecast future economic conditions. These may include PMI, consumer confidence, and housing starts. B. Scenario analysis. Consider various scenarios to anticipate the potential impact of different economic conditions on businesses and markets. C. Evaluate risks and opportunities. A. Identify risks. Assess potential risks, including economic downturns, policy changes, and external shocks. Understand how these risks may affect the economy or specific sectors. B. Explore opportunities. Identify opportunities arising from economic trends, market gaps, or technological advancements. Assess potential areas for growth and investment. 7. Communication and reporting. A. Create reports. Summarize your economic analysis in clear and concise reports. Tailor reports for different stakeholders, such as executives, investors, or policymakers. B. Present findings. Communicate your findings through presentations or written reports. Clearly articulate the implications of your analysis and any recommended actions. 8. Update and review. A. Regular updates. Keep your economic analysis up to date with regular reviews. Monitor economic indicators, policy changes, and other relevant factors. B. Feedback and iteration. Seek feedback from stakeholders and be open to refining your analysis based on new information or changing circumstances. Conclusion. Conducting economic analysis is a dynamic and ongoing process that requires a combination of quantitative and qualitative assessments. By understanding the broader economic landscape and specific industry dynamics, individuals and organizations can make informed decisions, mitigate risks, and capitalize on opportunities in a constantly evolving economic environment. Find us at